Welcome back. Our next guest thinks the Treasury's intervention on interest rates could send stocks to new highs as soon as next week. Mark Newton is Fundstrat's head of technical strategy. He's here at Post 9. It's good to have you back.
Thanks, Scott.
So this was that significant that you think the S&P, the Qs, equal weight leading into Jackson Hole? Like we've got a little bit of room here?
I do think it's a game changer.
Really?
I think we need to see the extent of what they're going to start to buy in terms of securities and how much. And a lot of that has to do with probably the Treasury put, which is now at about 475 for 10-year, potentially 530 for 30. So, in general, it's a hugely reflationary trade that does address liquidity concerns. We saw gold, we saw Bitcoin surge. Near term, the 1-2 combo of rates pushing back up along with crude is temporarily something that stocks don't like. But I think in general, the amount of breadth improvement that we've seen in recent months, along with this ongoing skepticism, is definitely a positive with regards to stocks.
The messaging alone from Treasury is enough to get us to where you think we can go? I mean, combined obviously with the robustness of earnings. Right? I mean, that's the story.
The one big problem was that the velocity of rates had really gotten out of hand on the long end. We saw breakouts on the 30-year, we saw breakouts on the 10-year, and it wasn't the level, it was the velocity of that move.
Yeah,
I think the administration as well as the Treasury noticed.
Yeah.
So my thinking is that they're stepping in now at a time when TLT puts Q was very elevated to say, look, we have to do something to help liquidity. Emerging market currencies are falling. The U.S., of course, has a huge balance. They have a ton of overseas securities in emerging market currencies. Meanwhile, their liabilities are in dollars. It would certainly help them to have the dollar go meaningfully lower at a time when growth remains still pretty decent. And that could actually decrease the debt to GDP that everybody's concerned about that now become a big hot button.
Forgive me for interrupting you. It was Rick Reeder who used the word untethered to your point at the long end. It was starting to look that way in his mind. What do you like best in the market right now? What sector? What area?
Honestly, I like three sectors. I like healthcare, I like energy, and I like materials. I think those three are likely going to benefit and be a good source of alpha for investors over the next few months.
Why so?
Well, healthcare per se, it broke out of nearly a 3-year downtrend. We used to have concerns about drug pricing, about the ACA subsidies. Now that has turned. Biotech is surging. We're seeing deals happen. Not only is it biotech, but pharma, but HMOs. Healthcare looks still very, very good to me. Obviously, the GLP-1 helps some of these other pharma stocks, but energy, my thinking is crude is going to revisit $100, which is going to make ending the war probably tricky in the near term.
Wait a minute, isn't that a problem then for stocks?
It could be a problem in September, October, yes. So I think it's going to prove short-term only, but we have one big final push up to right around 100, 110, and then crude should end the year down near the lows. So I think there is going to be an eventual solution better than what we're seeing now. But we know that they're using pipelines to take oil right now through the Red Sea, through the Gulf of Oman. We don't necessarily need to have the strait as much as we did. Already some traffic is starting to be circumvented. But energy right now is very much a short-term long, along with materials. Commodities surged yesterday. I think that's going to be an ongoing theme, just given what we've seen with real rates hopefully starting to pull back, which will be a source of gains for most metals, precious and base.
All right, we'll leave it there. It's good to see you again. Mark Newton of Fundstrat, the head of technical strategy. Up next.